Netflix's Q4 2023 results were record breaking. Let's get into it. So yeah, let's get to the after hours. It's up 8.3%. That is great. Must be good results, right? Let's see. We got market cap 215 billion, earnings per, let's see, PE of 49, and forward PE of 30. But let's get into the numbers. That's what you're here for, right? So anyway, it says they achieved our revenue growth, exiting the year with 12% revenue growth, which is up 6%, up from 6% in 2022. That is fantastic revenue growth for this company. That is enormous. If you look down here, the 12.5% is better than any previous quarter for the last 4 quarters. So it's amazing. It's amazing. Okay, so they increased their free cash flow to $6.9 billion for 2023. Now, we're going to go over in just a second how big of a number that actually is, especially for Netflix. They're really the only strong streaming platform right now. Disney, Hulu, Paramount, all the others are kind of struggling. Netflix is growing. In the face of all this so-called competition, Netflix keeps growing. It's insane. Okay, so let's continue. So they increased their value to members by further improving the core series and film, blah, blah, blah. Tapped into a significant new long-term revenue and profit pool by scaling our ads business. I would say they're also, charging for passwords, but beyond that, they deepened their connection with fans through marketing, customer products, and innovative new live experiences. Plenty of room for growth as streaming expands. That appears to be true. The North Star remains the same: to thrill members with new entertainment. If we can continue to improve Netflix faster than the competition, we'll have an increasingly valuable business for consumers, creators, and shareholders. Looks like it, huh? Okay, so yeah, this number's results. Revenue, $8.8 billion. That's a growth of 12.5%. That is amazing growth. Now, the margin did drop a little bit. I'll go over the reason why in a second. However, they're projecting operating margin next year in Q1 of 2024 of 26.2%. That's also a much higher margin than any previous quarter in the last 4 quarters, including this quarter. So that is an amazing number. And that's going to have a significant bottom line. So the free cash flow next year will be hugely more than this year. I know hugely more is not really a word, but let's go with it. So anyway, next year's revenues forecast is $9.2 billion, growth of 13.2% year over year, and an operating income $2.4 billion. So next year will make this year look like a joke. Okay, so Q4 results and forecast. Revenue of Q4 grew 12% year over year, 13% on FX neutral basis. Our healthy top line, revenue was blah, blah, blah. Operating income was about $1.5 billion, up from $0.5 billion in the year ago period. So that's a great year over year increase, triple for operating income. Operating margin improved to 17% versus 7%. That's fantastic. So yeah, they generated $7 billion of operating income, up 23% year over year. That is fantastic. Operating margin was 21%, which actually beat their own forecast of 18 to 20%. EPS was $2.11. As we enter 2024 with good momentum, we expect healthy double-digit growth for the full year of 2024 on an FX neutral basis. So yeah, that is amazing. And our aim is to make ads a more substantial revenue stream that contributes to sustained healthy revenue growth in 2025 and beyond. So they think long term, that's good. Our forecast for Q1 24, 13% includes, blah, 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 blah. We went over that. Net adds up to 1.8 million. And okay, let's continue. So yeah, they mentioned here the competitive so-called competition. It's not really affecting them. The competition is not really affecting them. Here's the various regions and their market share in those regions. You can go over that if you like, but it'll just bore down this video. Okay, here's where it gets insane. You've got pre-COVID and after COVID. Now, pre-COVID, 2016-19, the cumulative free cash flow for Netflix was negative $10 billion. and after COVID was positive $10 billion. That is a change on a dime. That was just a flip. That's the quickest flip I've ever seen, and such a large flip I've ever seen in my life. That's insane. And here's the long-term stock performance. So this is annualized. So annualized, had you owned Netflix since their IPO, you'd have gained 33% per year. On a cumulative basis, that would have been 45,000%, which is amazing. Nothing else to say there. Here's some region-specific information, which you can go over if you like. Okay, so let's get down to where the numbers. We want the numbers. So anyway, the revenues jumped about $300 million quarter over quarter. Cost of revenues also jumped about the same amount quarter over quarter. Now, where the reason the margins decline Q over Q is due to the marketing expense. I'm assuming it's because of the end of the year marketing push that most of these companies do. And technology and development is $673 million. G&A is $440 million. Interest expense remains flat, which is good. Netflix doesn't really need to care too much about paying down interest. They make so much money that they could really pay it down quickly if they want to. But they choose right now to buy back shares instead of paying down their interest, which appears to be working out well for them. They have $7.1 billion in cash, $9.9 billion in current assets. Long-term debt is $14 billion, but again, they can pay that down quickly since they're making $7 billion in free cash flow this year. Let's see, net income 3 months was $937 million. 12 months ended was $5.4 billion. That's up from $4.5 billion the previous year. That's a huge increase. Stock-based compensation is $82 million. Let's see what else we have. Okay, so they repurchased $2.5 billion in common stock, and Netflix has a cash of $7.1 billion. We went over. Okay, so yeah, this is the end report. It's a short report. Okay, so again, as I mentioned, you got pre-COVID, you got after COVID, and it's two different companies. So pre-COVID, 2016, free cash flow, negative $1.6 billion. 2017, negative $2 billion. 2018, negative $3 billion. 2019, negative $3.2 billion. Now, I gotta be honest, there was a time here during this period that I thought this company was having issues. I wasn't sure if they were going to make it. You know, can you blame me? Losing $3.2 billion in a year when at the time the revenues weren't growing that much. Revenues weren't that great, and losing $3.2 billion in free cash flow was not good. But the virus struck and things flipped on a dime. So the very next year, 2019, negative $3 billion. 2020, positive $2 billion. That is a flip of over $5 billion in free cash flow year over year. You don't see that anywhere. So Netflix did amazing there. Now, what COVID did is it pulled demand forward. So that negatively affected 2021 and 2022. So 2022. 2021 came at negative $158 million free cash flow. 2022 was a positive $1.6 billion free cash flow. So you see, demand got pulled forward. And now that that's over with, 2023 was a monstrous $7 billion of free cash flow. That is fantastic. And this company has a bright future ahead for itself. It's a monster. Now, you'll see also new news. The WWE's Raw is coming to Netflix in 2025. And, so yeah, on my Patreon, we have an early bird special. There's only 2 seats remaining. Next 2 people in, get it. If you're not the 2 people next, I'm sorry, but that's it. Just 2 seats left. Okay, so for my early bird special, what I do on my Patreon actually is I value companies and I do investment reports and DCF valuation models. I focus on growth and tech companies, and I'll be doing Netflix soon. So the DCF valuation spreadsheets are part of what I do. I also do investment analysis reports, Patreon portfolio access. Oh, I have a Patreon exclusive portfolio. How I pick stocks, fan requests, chat community, Patreon only updates. See, the thing is, this is $1 a month, and it's for a $75 per month value. So This is dirt cheap. And it's literally the cheapest price that I was allowed to do on Patreon. So yeah, it's only $1. Join my Patreon. That's it for me. Thank you for watching, and I'll see you in the next one.